Well, we just got those personal income and spending numbers. What the surprise was on the spending front, up by 0.7%, better than forecast. McKee, I know you've been going through those numbers. What do you think?
Good news. The spending numbers are a bit of a surprise in terms of the size, but everybody expected us to have had a good December. We spent a lot of money on Christmas presents this year, and it shows up 0.7%. That's why we saw a bigger than expected jump in the personal consumption aspect of GDP on Friday. The good news going forward is in personal incomes, they were up 0.4%. As expected, but wages and salaries rose 0.3%. And if you don't have the money to spend, you can't spend it. So the fact that salaries are rising is particularly good news. The Fed's going to be looking at one other thing, and that's the rate of inflation. It falls again. The personal consumption expenditure index, their favorite, on a year-over-year basis, up just 0.7%. That keeps QE2 in place. They don't see any inflation. Still a danger. You got black swans like Egypt out there. Some sort of shock could push us into deflation. They don't want that. And Betty, the interesting thing about this number today that relates back to GDP is that we spent all that money, but we used some of our savings to do it. Unfortunately, the savings rate falls to 5.3% from 5.5%. Everybody was supposed to be building their savings up after the financial crisis. We overextended ourselves, so we were going to put money in the bank. Looks like we did that, but then all of a sudden decided now we can spend again. On a quarterly basis, you can see there the savings rate fell. That really affected the spending numbers in the fourth quarter. The question is, will income growth make up for that? Will we be able to keep this up going forward?
Right. We need to get that savings level at a certain point before we get that real spending going, right?
Exactly.
Mike, thank you.